Yo, what's good, everyone? This is Arjun, also known as the franchise. So I'm just going over two trades I took this morning that could have netted you about 8% on your accounts. Trading US30. So here's my explanation, guys. So what I first did in the morning, I have to make sure I have understanding of what's fundamentally going on and where the sentiment of the markets is. So is it risk on, risk off? I'm making notes of this, and I'm just writing these down to understand where the market is holding its probabilities. So I start on the weekly after this, and let's just go down and do my top-down analysis. Start marking key levels. I use the yellow to mark the higher time frames. I use the blue to mark our lower time frames. And on the 5 to 15, I mark these green lines that I don't have on here right now. So I move down, see that there's a consolidation around this range here. So I'm looking to capitalize off this depending on what happens with any fundamentals. So at 8:30 there was unemployment claims, and that was a key medium impact news that I believe the market was watching because that would have an impact on the Fed's fund rate, and it would have an impact on the U.S. economy. So go to the hourly, and I noticed this range. So I'm eyeing this area here, right here, and I'm waiting for this news to come out. As the news comes out, I'm on the 15-minute time frame, and the news came out, and unemployment claims were low. So that means that people weren't claiming as much unemployment, which is really good for the U.S. economy. It's potentially good for the U.S. dollar. And some people will claim that it's good for equities and also could be bad. It depends on the perspective. So this is kind of it's a it gave me a bias that I have to follow the price action more than anything, because end of the day, the markets could be really happy that there's a low unemployment, but at the same time, if there's low unemployment claims and the workforce is high, but then all the geopolitical concerns and the risk sentiment were weighing against this, maybe the market would drop. So I follow the price action. So I go to the 5 minute now. And so I saw that it was testing this area here actually. Touched once, it broke, it pulled back, touched again, and then it touched here. And that's where I decided to get in right here. So I got in actually right around here. Moves up right around here. And then I had a really tight stop loss right here under this level right here. I would have closed it right around here if it had broken. And my take profit was at this area, this yellow line here. So that's almost 2.5%, 3%. Took the trade, actually went into profit, and I took the profits right here. I took full profits, which might have been not the best move because the market proceeded to go up even higher actually, and I could have netted about 4 times my risk there, but instead I only got about 3 times right there. But you learn from this, and that's why I'm making this video too. So the market proceeded. So I made this profit here. It's a little bit I was in a good mood, and after you're in a good mood from trading, you got to take a little break and relax and go back to charts with the level head. So I took a little break, started to notice the market had dropped here, and then it came back higher, touched this area, but you see that there's wicks here, these wicks. So it shows that this area right here, the market had a tendency to start selling. So I started to note that on the lower time frames with a green line. I went 1, 2, 3. So there, right there. Change the color to a nice, that's green, a nice little green color. And so I noticed that there's 1 touch, 2 touches, 3 touches, and 4. Okay, so now I'm very biased. Like on this candle here, I'm actually biased that I would actually go short. It's because I see this. There's a lot of selling at this key level that actually works with this key level here that I had noted on the higher time frames that potentially the market would be selling at. So I thought that the probabilities lie that the market would sell. So what I did was I took this trade right here upon the selling as it started to push lower. I took a trade here and I put my stop loss right around this area here. And this was pretty discretionary on how I set my stop loss. And then I proceeded to let the market, I proceeded to let the trade drop. And I took profits right around here, this area right here. as the market dropped and then it came back. I took profits right around here. So that's about 5.8%. And so with the other trade, I just netted around I netted around 8 to 9% on these two trades. So that's my analysis on this, guys. Very simple. It explains the trade simply, but there's a lot of preparation that goes into this, and a lot of my routine that I'm not going to talk about right now. But if you guys want to have videos on routine, on fundamentals, on sentiment, on risk analysis, please comment in the bottom here and let me know. And catch you later, guys.